Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update. And this is for Tuesday, the 4th of April, 2017, about 1:45 p.m. Central Daylight Time. As you can see, the gold market up about $3-4, silver market gaining a little bit on gold, and even the coppers found some support against the 260 level. I was surprised to see platinum as strong as it is, but it's there. And I only say that because we've all seen the car manufacturers say how bad their sales are, and they may have to, again, as we go into summer, close down some plants, do some restructuring in different ways. Who the heck knows? But we're still getting that bid. The dollar, not a real partner or enemy of the markets today. It's basically unchanged, up 3 ticks, and you're not doing much in the euro. You're down 1.5 points. Down 1.5 means 1.5 points in that particular part. So not getting much of that. We know that we're going to see President Trump this week meet with the Chinese president, and we're going to hear a lot of trade talk, and certainly these markets will be impacted by what comes out of that, although Congress has not approved Mr. Trump's cabinet positions to negotiate yet. So he's really going in there winging it more than anything else, and I don't know how much you can expect to see out of that because of it. But let's take a look at what we've got. In the gold market, as I've said, I'd love to see the market as a bull get over these highs. Hasn't yet done it. We see the support, and more important to me on the weekly chart, I want you to look at the 100-day and the 18-day. In red is the 18-day average of 18-week moving average of closes. It's a weekly chart. And the 100-week, we're going to get a crossover. And that's getting exciting because if prices can stay over the crossover, theoretically it means prices might make a run for that upper Bollinger Band number. We did not close over 1258.80. We're coming up to it, and that would change this for me from a down thrust to an up thrust on the chart. So we're at an important resistance point. When you take a look at the daily bar chart, you can see how the market's now back up here, and it's been here several times. So we had a double top. Now, you could say this is a shoulder and another shoulder and a head. That's one of the things you could argue. And if the market breaks out to the upside, you would just grab this, pull it up, and what would happen is you'd get an objective from the difference of here, 1258 to 1200. You'd add 58 to that. You get about a 1316 number right up here. I can just do that off the top of my head. And we're going to create videos to show you how to do all these things in a library that we're putting together. In the June swing line, what you have is a market that made a lower low, the higher high here. This high hasn't yet taken out 1264.20. It got close. It missed it by 50 cents today. Not very much, but the market is certainly trying to get itself moving to the upside. And you can see that now the 18-day average of closes is starting to race towards this last break low of 1241.50. Certainly today's settlement will help it jump tomorrow when the markets reopen. It'll get very close to it. By the way, you might ask how I know that. If you take off today's number, the day before was 1236.70 and the day before 1234.40. So let's assume it's moving about $2 a day. All right, if you add 1239.50 to that, you're going to be right up about there. And the reason I know that'll jump is because the settlement here is higher than one of the days back here that was part of that 18-day average of closes. So still good action. This is what I'm looking at the most. As long as the slow stochastics don't see that red line turn under 80 and close under 80, the bulls have control of the market. Possible objective, 1279.50 on this run. In the gold ETF, embedded stochastic, today's rally got over this last high, so you have a lower low and a higher high now. That's not bad. The gold miners did the same, higher high, lower low, but it's overbought. They're still not the leader of the pack. The futures are the leader right now, and you're getting the follow-through on the ETF. In the gold-silver ratio, what I use this for is to get an idea, is gold weaker or stronger than silver? And the idea here is this is how many ounces of silver you'd have to put in your basket, your bushel basket, carry it to your local numismatic store. They're generally the ones that will sell you a Kruger Rand or a bar of gold, and trade it in. Now, this does not take into account premiums that they might want to charge you for doing that. It's just raw gold, silver, and the lower it goes, the stronger silver is relative to gold. In the silver market, this market's got its fully embedded stochastic. It's been fighting at the 200-day moving average of closes. I'm not showing that on this chart. I am showing it in my morning videos, and they see where that battleground is. That's a big number. If this market can stay over that 200-day average, and it will get traders saying, maybe this whole area of silver has become a big base and the market wants to move higher. Don't know, but we'll find out from that. All trends are up. Should it continue, 1868.5, about 36 cents higher, could be the next stopping zone. The silver ETF, embedded reading, that's to me is key. Higher lows, higher highs, could be going towards 1760, the next rally high. The copper market's now got 2 days under the 100-day average. It looks like it wants to rally a bit and challenge that. It is not trending. You got a lower low and a higher high, and this break low did not go to that one. It found support, as you can see, within 35 points of the Bollinger Band bottom, but momentum is still pointing down, so I think the bears still have control of the market overall. The platinum market snookered me. I thought the market was going to be weaker. I frankly thought that when it got to the 18-day average of closes, it would not clear 963.50. And at that point, you had lower lows, lower highs. The reason I've got the arrow pointing up now is today you took out that high. You did stop right against the 100-day average, and momentum is just flattened out. I don't think there's a trend there to trade at all. In the palladium market, we have a market with higher lows, higher highs, overbought. The overbought is the difficult part. Yeah, the trend is up, but being overbought keeps a lot of traders away. Now, in the dollar index, will the market slip back down and hit the 18-day average? Has to be in everybody's mind. You're overbought with a 72 reading. Does the market get a bid like the yen has been getting a bid because of the Chinese meeting this weekend with President Trump? What's going to be the outcome of that? What's going to be with the threats that we keep hearing with the U.S. against North Korea after this takes place? I mean, you're liable to just hear the Chinese can't do anything about North Korea, and President Trump goes on his own in some action. That's going to keep a bid into that market because people get scared. So those are the things you got to think about. What the answers will be out of the summit that they're having, I wish I could tell you. I don't know. But what I do know is one of the things I look at in metal markets is what's the seasonal at any given point in the year. Is there a seasonal that's reliable? That's number two. Well, I use seasonal patterns from the Moore Research Center. Now, for those of us that have been around a long time, this is a well-known name. If you're new to trading, what they do is a database, and on the database they go on a daily basis. If you bought or sold at a certain day and you got out at this day, what's the percentage of catching a trend with that? Obviously, and there's a big obvious, past performance is not a guarantee of future performance. And especially in some markets, it's got a lot less reliability than others. I mean, grains, we know we're going to plant at a certain time, we're going to harvest. Different pressures come on the market in between from weather and so on. In mining, you also get certain pressures at different times of the year. Energies, what about gasoline? What do you do? Well, it's all here, and it's explained in detail, and you get interactive charts to see bull bears, neutral years, bearish years. You can play with them and get an idea as to what you think is at work. In addition, they're going to give you, in the reports, buy dates, sell dates, the probabilities. Again, with those caveats, and that's what's right here. How do you get it? We want to give you 2-week access to their website. It's really simple. You either give us a call, you can go online, sign up for it. You're going to be sent an email and a password. You go right to their website, and from there you work with it. call us, 866-973-2077. You can go to our website at www.iraepstein.com. You'll see there on the carousel of free offers, the More Research Center. And just as well, you can come right up here and click on this icon if you're seeing me on YouTube. And once you click that on, fill out the forms. We send it to them. They'll send you the rest of everything you need. There's all the information. I'm Ira. Have a good day.